Welcome to Neural Nexus Podcast, where we explore the hottest topics shaping the world. Let's dive in.
Okay, so welcome to the deep dive. It's March 2025, and gosh, if you're anything like me, I mean, you're probably feeling like things are a bit rocky out there in the economy, you know?
Yeah, no kidding. I think a lot of us are feeling that way for sure.
This is just like inflation is eating away at our paychecks, and the stock market is all over the place, and don't even get me started on grocery prices.
It's like every time you go to the store, you need to take out a small loan.
Right, seriously. And with all this talk about global trade changing and AI maybe shaking up the job market, it just feels like a lot of uncertainty, you know?
Totally. It's definitely making people rethink how they handle their money.
Exactly. And that's why we thought it would be the perfect time for a deep dive into, well, saving money.
Yeah, we want to help you guys build a solid financial foundation no matter what crazy stuff is happening in the economy.
So think of this as your guide to not just surviving, but thriving in these times.
We've got your back.
We've been doing our research, and we got 5 key areas we're going to focus on that can make a real difference in your financial life.
So where do we start?
Well, first things first, we have to talk about the one thing that everyone needs, but a lot of people kind of ignore or don't really do, right?
Ooh, I know this one, the emergency fund.
You got it. That's like the bedrock of your financial security.
Especially when things feel so unpredictable, right?
Exactly. And the crazy thing is that so many people are unprepared for even a small financial hiccup.
Right, like a flat tire or a broken appliance.
Totally. And there was this study by Bankrate last year in 2024.
Okay.
It said that a whopping 60% of Americans couldn't even handle a fund dollar surprise expense.
Wow, that's scary.
It is. It means that a lot of people are just one unexpected event away from real financial trouble.
Yeah, so that's why having that emergency fund is so crucial. It's like your safety net.
And the general rule of thumb is to aim for 3 to 6 months worth of essential living expenses in that fund.
Okay, 3 to 6 months, that's quite a range, right?
Yeah, it is. And that's because it really depends on your personal situation, you know?
So, like, how stable is your job? How likely are you to face those surprise expenses?
It's exactly. If your industry is kind of shaky or you've got dependents or a house that could need repairs, well, leaning towards that 6-month cushion is probably a good idea.
Makes sense.
And remember, this is just for the essentials, your rent and mortgage, your groceries, utilities, you know, the stuff you absolutely need.
The bare bones stuff, yeah.
Now, the good news is that even with some economic headwinds, savings accounts are actually looking pretty decent these days.
Oh, really?
Yeah, in 2025, high-yield savings accounts are paying around 4% interest.
That's not bad at all.
Not bad at all, especially compared to those low-interest checking accounts where your money is basically just sitting there.
Yeah, losing value with inflation.
Exactly. So putting your emergency fund into a high-yield savings account is a smart move.
Okay, so we need to build this emergency fund. But starting with save thousands of dollars can feel overwhelming, right?
I know it can be daunting. So the key is to break it down into smaller, more manageable goals.
Smaller chunks.
Yeah, maybe start with a target of $500 and then set up automatic transfers from your checking account to your savings account.
Oh, like putting it on autopilot.
Exactly. Even just transferring $50 from each paycheck can add up to over $1,300 in the year, plus that 4% interest.
Wow, that's actually way more achievable than I thought.
Right. And when you think about all those economic what-ifs like job changes or price hikes, knowing you have that emergency fund there just gives you peace of mind.
It's like a stress reliever.
It totally is. Okay, so we've got that foundation in place. Now, how do we move on to really taking control of our savings?
So now we need to figure out where our money is actually going right. It's like that saying, you can't fill a leaky bucket.
Ooh, I like that analogy.
You could be trying to save more, but if you've got spending leaks, well, you're just not going to get very far.
Makes sense. So we've got to find those leaks and plug them.
Exactly.
So the best way to do this is to track every dollar you spend for a whole month.
Oh, wow. Every single dollar.
I know it sounds tedious, but trust me, it's eye-opening.
Okay, how do we do that, though?
Thankfully, there are some amazing apps out there like Mint or YND.
Why in that? What's that stand for?
You need a budget. It's a super helpful tool.
Okay, cool.
These apps can help you see exactly where your money is going, and it can be pretty surprising sometimes.
Surprising in a good way or a bad way?
Well, let's just say you might start to rethink those daily lattes or those little impulse buys when you see how much they add up over time.
Oh, yeah, because individually they don't seem like a big deal, right?
Exactly.
Yeah.
But it's the little things that can really sabotage your savings goals.
So like that $15 takeout lunch habit.
That's a perfect example.
Yeah.
Our sources talk about how that can easily add up to $5,000 over a decade.
No way.
It's true. So once you've got a good grasp on where your money's going, you can start making some strategic cuts.
Okay, like what kind of cuts?
Well, cooking more meals at home instead of eating out is a big one.
Yeah, that makes sense.
Meal prepping can be a lifesaver too.
And it's healthier usually.
And speaking of little things that add up, how many subscriptions do you have that you don't really use?
Oh gosh, probably more than I'd like to admit.
Right. The average American wastes around $200 a year on those forgotten subscriptions.
It's like throwing money away.
It is so cancel those unused subscriptions and put that money towards your savings instead.
Okay, got it. Cut subscriptions. What else?
Now, when it comes to bigger purchases, think twice about buying brand new, especially when it comes to cars.
Oh yeah, the used car versus new car debate.
New cars depreciate like crazy the moment you drive them off the lot.
Yeah, that's true.
A good used car can save you a ton of money.
So we're saving money by cutting back and being smart shoppers, but what do we do with all that extra cash? Just let it sit in our savings accounts.
Well, that brings us to our next key area, investing.
Investing. That sounds scary.
I know a lot of people think that, but it doesn't have to be. And honestly, just hoarding cash isn't the best strategy either
Why not?
because of inflation. Inflation is basically your money losing value over time.
Oh, right, because things get more expensive.
Exactly. So if your money isn't growing, at least at the rate of inflation, you're actually losing purchasing power.
Okay, so how do we get started with investing?
Well, it doesn't have to be complicated. You can start small with something like an S&P 500 ETF.
What's an S&P 500 ETF?
It's basically a way to invest in the 500 biggest companies in the U.S. all at once.
Oh, so it's like a basket of stocks.
Exactly. And
Yeah.
historically, it had an average annual return of around 7%.
7%, that's way better than my savings account.
Right. And over the long term, even a small investment can grow significantly.
Okay, I'm intrigued, but I don't know anything about picking stocks.
That's okay. There are these things called robo-advisors, like Wealthfront.
Robo-advisors?
Yeah, they use algorithms to manage your investments for you.
So it's like having a robot financial advisor.
Exactly. And they usually have low fees, too.
Sounds pretty good. So ETFs, robo-advisors, any other options?
Well, if you're looking for a lower risk option, you could consider U.S. Treasury bonds.
Treasury bonds.
They're basically loans to the government. And in 2025, they're offering returns of around 4%.
Not as high as the stock market, but probably safer, right?
Exactly. They're considered very low risk because they're backed by the U.S. government.
Okay, I'm starting to get this. Now, how do we decide how much to put in stocks versus bonds?
That's where diversification comes in. It's basically spreading your investments across different asset classes to manage risk.
Don't put all your eggs in one basket, right?
Exactly. A common guideline is to have a higher percentage in stocks when you're younger, since you have more time to ride out any market fluctuations.
Okay, so more risk when you're younger, and then as you get closer to retirement, you shift more towards bonds.
Right. That's the general idea. And remember, time is your friend when it comes to investing.
Yeah, I've heard that time in the market beats timing the market.
Exactly. Don't try to predict the ups and downs. Just stay invested for the long haul.
Got it. So we've got our savings, we're investing, but is there anything else we can do to boost our financial security?
You bet there is. And this one's all about making more money
Okay, how do we do that?
by exploring the world of side hustles.
Oh yeah, the gig economy is huge these days.
It is. There are so many opportunities out there, whether it's driving for Uber or freelancing on Upwork or selling crafts on Etsy.
So many options.
And even a part-time side hustle can bring in some serious extra cash.
Like how much are we talking?
Well, imagine earning just $20 an hour for 10 hours a week.
Okay, that's an extra $200 a week.
Exactly. That's over $10,000 a year.
Wow.
And if you invested that extra income and earned a 7% return over 30 years, you'd have over $200,000.
That's insane.
It is. And the best part is you can leverage your existing skills and passions to create a side hustle you actually enjoy.
So if you're good at coding, you could teach online coding classes.
Exactly. Or if you're a yoga instructor, you could offer virtual yoga sessions.
Or if you love to bake, you could sell your baked goods online.
The possibilities are endless.
Yeah.
And that extra income stream can be a real game changer, especially if you face unexpected job loss or if prices keep going up.
It's like an extra layer of protection.
It is. So to sum up what we've covered today, we talked about building an emergency fund, slashing unnecessary expenses, shopping smart, and negotiating getting started with investing and boosting your income with side hustles.
That's a lot of information.
It is, but it's all about giving you the tools to build a solid financial foundation and weather any economic storms that come your way.
And remember, it's not about being miserable and depriving yourself of everything.
Exactly. It's about making smart choices with your money so you can have more freedom and security in the long run.
Like being able to cover your bills without stress or knowing you can handle unexpected expenses.
Or having a comfortable retirement without having to worry about money.
Okay, so now that we've gone through all this, what should our listeners do next?
That's a great question. I think the best next step is to pick one area that resonates with you and start taking action.
So either diving deep into your budget or exploring those side hustle options.
Exactly. Even small steps can make a big difference over time.
And the most important thing is to just get started.
I completely agree. Your journey to a more secure financial future begins today. Thanks for joining us on the Deep Dive.
See you next time. Bye.